Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, February 17th, 2016. So you try to take a conservative route like I did yesterday and take some profits, and they stick it to you and rally at another 31 points. But that it's pretty normal. It's when the markets they've been in this all in, all out environment. I just saw the risk reward as far as holding the long position wasn't really there, but obviously it was there if you held it because you got another 30 points. But it is what it is. We know when you get these big moves like we saw here, you get very quick drops, and I really didn't want to roll the dice on that end of it, and that's it. So I had showed you the fractal pattern where this looks very similar to this, and I do believe this is going to be what's playing out. Now, is it going to be able to make it all the way up here? Maybe. It's hard to bet against momentum when it's in either direction, and right now the momentum is moving higher. So 1960, this is a resistance zone right here. I still believe ultimately we're heading up here. Once this completes, then we're going to make the wave C down, but again, this could be scratched. Just for right now, that is the format that I'm looking at. So here's this resistance line's been here the whole time. It's right where we hit. We don't really have any bearish divergences. Excuse me. We don't have any bearish divergences, but you can see we are now extremely overbought on the 60-minute chart. So again, do I want to chase this here? No. It's just not really what I'm looking to do. I'm still looking to work the long side, but I'm waiting, for a pullback to get long, and I'm going to be patient with that. I refuse to try to chase this market, not with the size of the moves that's happening, one after another. So you can see on a 15-minute chart, this was the bearish divergences that had me nervous as we approached the 62% retracement. It seems like a lot of people may have been shorting there and they squeezed them here. That wiped out the bearish divergences. As you can see, we made a higher high here. So this is what happens. You could trade what's in front of you with resistance, bearish divergences, very overbought, and then you end up seeing something like this happen. So the bad news was we could have had another 3.2% on the SSO trade. The good news is we weren't short and getting squeezed here. So if we look, you can see we do have some bearish divergences starting to form again on the S&P here, as we're making some slightly higher highs as the price oscillator is making lower highs. Now we're also at resistance, so we know the routine here. Either we're going to get the pullback or they're going to gap it above, just like they gapped it above here and they gapped it above here. This is the way the bulls work. They like to gap it. So that's why unless there's specific reasons to be shorting, you don't want to, because you're going to get trapped in one of these. So we are at resistance. We have bearish divergences. I'm not willing to chase it. If it, if it pulls back, yes, I'm interested. Maybe down at this 1865 level, I would like it to go. Will it get there? We'll find out soon enough. But taking a look at the 5-minute chart here, you can see. Again, we have the bearish divergences in place. It hasn't really done anything because we've gone straight up. Pullback wise, again, the 1884, 55, 65 level. This is where I'm interested in buying. Right now, not, with this type of move off of the lows, I'm waiting for a pullback. When it does, again, continue to work the long side. Once that completes, then most likely everyone's going to be looking higher, and we're probably going to be starting the next move lower. But right now, I still believe there's some time left, and we want to continue to work alongside. We just want to wait for the bulls to take a little bit of a breather and jump in, and that's about all I have for tonight. So with that, have a great night, and I'll talk to you guys tomorrow.